Hi everyone, welcome to another episode of Ship It and Sip It. And today I am very glad to have a guest joining us from Vienna, Austria, Lukas Rieder. And he works with Greca, which is a platform that connects founders with the right investors for their startup. And in today's episode, we're going to talk about problems founders face with raising the right funding from the right investors, how Greca works to solve these problems for both VC funds and startup founders, how AI is improving this matchmaking process, and what effect the current market downturn has on startup fundraising in Europe and perhaps in the broader global market. Lukas, thank you so much for joining me. How are you doing today?
Great. Yeah, it's great to be here. Actually, I'm just back from a 2 weeks holiday, so I'm really relaxed and yeah, good to be back.
Yeah, it's classic holiday season in Europe. As an American, it always kind of strikes me as funny and good that so many people are out of office this time of year. But I'm glad you had a great holiday, and I'm glad you're here to talk about Greca and startups and fundraising. So let's start with Greca. What are the main problems it solves, and who's it for?
Mm-hmm. Yeah, maybe I can give you a little bit of background on Greca. And yeah, we do know a lot about the problems startups are facing in this whole fundraising process, because we are a carve out of a former consulting company, Austrian consulting company called M27 Finance. M27 Finance was for over 5 years one of the leading advisors in business and project financing. Yeah, and we were very close to the startups and knew a lot about their pains, that this whole fundraising process is very time intense, inefficient, and you of course also need a big network of it. Actually, it was not only the problems of the startups, it was also our problems. I mean, we supported the companies in this process, and we also spent a lot of hours on calling investors, on reaching out to our network to find them an investor. And yeah, this is why we established Greca. In 2018, we got acquired by a bigger Spanish consulting group, and with the financials of this consulting group, it's the Inspiralia Group. They're a big, innovation consultant with offices also in Miami, in Madrid, and in Cambridge. And with the financial muscles of this Inspiralia Group, we decided to develop a toolset to digitalize our processes, and we invented Greca, which stands for Growth, Equity, and Commercial Alliances, and which helps startups to get easier access to investors. It's kind of a marketplace to connect investors with companies and startups. And the main functionality, the core functionality, is an matchmaking algorithm that ensures that they find the right investors. In addition, we do have many other tools online to create standardized documentation, to make documents, valuation reports, and so on through the platform, in order to increase also the transparency in this whole process. And we support this, of course, also with our consulting services, but we do have also online packages where the companies can just access Greca and access then also investors through Greca.
Fantastic. And I guess through the 2010s and up till last year, or just a couple months ago, actually, it must have been a very busy time and a time of growth for Greca and the whole team. I guess, can you reflect on that a little bit? What were some of the growing pains along the way for Greca?
Yeah, sure. I mean, as you may know, M27 Finance and our former company was very much focused only on the German-speaking region. We were only active in Germany, Austria, and Switzerland. And yeah, with the acquisition of Inspiralia, this whole thing became an international focus, and we really had to build and integrate an international business partner, advisor, and startup network into Greca. And this was for sure a big challenge, but also a very interesting challenge to meet people of different cultures, to meet startups of different cultures, and yeah, to integrate them all into Greca.
And speaking of meeting people, I want to take a moment here and thank my colleague Konstantin for reaching out to you and meeting you at Hub Berlin just a little bit ago. And hopefully more people will be able to meet up with your team in upcoming events. We'll get to that a little bit later. But let's talk about your journey a little bit. How did you find your way to Greca, and what really excites you about your role there on the team?
Sure. Yeah, I do have a background in business administration, economics, and finance, and I started at M27 over 5 years ago as a consultant. I was supporting projects in the public and private funding area, supporting with the preparation of business cases, financial models, valuations, pitch decks, but also writing grant applications, because we do have many grant programs here in Austria, but also European grant programs. And I got then promoted, became a senior consultant, project manager, and 2 years ago I took over the position as business development consultant at Greca. And what excites me most, I think what excites me most is really that I get to meet so many startups, and they all pitch their business cases to me. So you really stay up to date about the trends and about all the new developments, about all the technologies, because we are very much focused on innovative and technology-oriented companies who really want to change the whole environment.
Awesome. Let's dig into that just a little bit. So can you describe a little bit the pipeline for founders if they'd be interested in approaching Greca? How do you sort of source leads? Do you guys have people apply via the website? Do you have people reach out to you via social media, cold emails? How do you usually find these startups?
Mm-hmm. Yeah, of course, we do have an online application form, so you can just visit our website and register in the platform. There are also some freemium tools available. The companies can provide all the company information. They can perform a first assessment report also for free. This gives them very valuable information on the business and how to improve the business in order to become more attractive for investors. It's kind of an assessment based on 5 different methodologies. We speak here about technology readiness level, team readiness level, business readiness level, financial stability level, and market attractiveness level. And based on this criteria, the company is assessed and gets some advice how to improve. And based on this, then also a first matchmaking can be prepared. As for our pipeline, we work also very closely with business partners. We do have a huge business partner network all over Europe. We are very strong in the Nordics. There we have people who do have a good network within the startup environment, or who are also consultants in this area. We do work with many grant consultants and so on. Have here business partners in Denmark and Iceland, but also in Finland and Norway, and basically all over Europe, France, the Netherlands, up to Israel. And of course, there's also a very strong presence of the Inspiralia group. They do have offices in Madrid. So we also do have our people in Madrid and even in Miami and Cambridge. And they introduce companies to Greca and help us to collect the information and see if we find cases which we can support with fundraising.
Fantastic. And just in terms of the site, I read there on Greca's site, in general, it's important to have a good business network in order to get new ideas and with a bit of luck to meet a suitable investor. So from that, I understand that is Greca's main goal to help founders who might not have that network that they need to get the investors that they want on board with their startup?
Definitely, Greca can help a lot in breaking down barriers and giving them access to such a network. But I think you can also use it complementary. We do have many clients. I mean, let's take the Nordics. They do have a great network in the Nordics, but they want to expand the business. Maybe they want also to start operations in the German-speaking region, and there they do not have a network. and they're searching for investors in this area to help them also build the company in this area, in this geographical area. And I think here also Greca can give them access to new contacts that could be interested in the business case.
Cool. At what stage do you think founders should approach Greca? Should they wait until they've got an MVP launched and some traction? You mentioned the assessment report that you have. Is that something somebody can start pretty early?
I think it always depends on the sector, but I think Greca is not the right partner if it's only a loose project or in a very early stage before an MVP, because at this stage I think they should more focus on public money, on grant applications, or to receive funding of family and friends. And at the later stage, they can then search for external investors. This means we hardly do any pre-seed. We sometimes do seed rounds, bigger seed rounds, but our sweet spot are really Series A plus financing rounds.
Okay, that's good to know. You mentioned working a lot with pitch decks earlier in your career and helping startup teams prepare them. That's one part, but can you expand a little bit on how founders should, in general, prepare for the fundraising process? Maybe they're first-time founders, they don't know what they're getting into. How can they improve their chances of raising the funds that they need at the time and also raising them from the right investors for their stage?
Mm-hmm. Yeah, I think founders really have to do the homework. I mean, first of all, they need really a good team, a convincing team, and also a good product or technology with a high market potential. And then it's about getting the message across and really doing also a convincing performance in the pitches in front of investors, so that an investor really thinks, yeah, how should I say, this guy is really nailing it. He knows what he's doing. And in order that founders really create belief, and at the later stage, they then also do have to back this. They have to back what they tell in these pitches. But first of all, it's all about getting them interested into looking deeper into the business case and approaching, of course, also the right people, because this is also, a real pain for many investors, but also founders, that they investors receive so many pitch decks from all around the world, from different sectors, while they do have a very strict investment policy, or only some sectors where they are really familiar with and can accept the deal. And here, founders really have to do the homework before asking for external money.
Right, and I've heard that from, or read that from founders, that fundraising process just takes a lot longer than they expected, or a lot longer than it may seem until you try and do it yourself. So let's talk about founders in Europe, I guess, since that's sort of your specialty. What are some of the biggest challenges facing them right now? And maybe we could break it down by different stages if you want to be that specific.
Mm-hmm. Yeah, I think there are different problems, and also in different phases. I mean, as mentioned before, first of all, it's about identifying the right investors and getting them interested and approaching them. And you also do have to approach the right people within a fund, especially if you consider bigger institutional investors. It depends also a lot on whom you speak to within the fund. And here you have to approach the right people, because otherwise you maybe get back a one-liner with a decline without a very relevant feedback, and it could still be an interesting opportunity for this fund, but this financial analyst of the fund did not get the message, and this is a big pain point for many founders. I think here Greca can also help, because when you create an investors long list, the matchmaking through Greca, you always get then for the bigger funds also the right contact person for your business model. I mean, if we take a bigger investor, for instance, they do have different funds, one focused on healthcare, the other one focused on cybersecurity. And it's, of course, important that you approach the right people within this fund. Then at the later stage, it's about pitching. It's about presenting the business case in a very structured way, and getting them again interested to learn more about this opportunity, but really covering the whole potential of the business case, but also still show a clear structure in this pitch, so that they know that you do have a plan for the future of this business. And afterwards, it's about backing all this information. You do have to make after first meeting, often a product demonstration, or you have to back, of course, also the financials. You have to show that you do have these contracts and so on. And therefore, it makes no sense to exaggerate in the pitch deck if you cannot back it at a later stage. And this is also why many investors pass then during the due diligence process, because when they look closer into it, they see that there are weaknesses in the case.
That's great advice and very, very helpful and detailed for the founders that might be listening. I'd like to circle back and get your advice on the network effect itself. For maybe new founders who don't have a very strong network, how would you advise them to grow it? I mean, they're busy trying to grow the product, to grow the startup itself, and they also need to sort of improve their professional network to find these investors that they need. Do you have any advice for them? Is it events? Is it building in public on Twitter or on LinkedIn is very popular now? What are some of the high impact things that you would advise them to do?
Yeah, I think events are for sure a good option, and I think this area improved also a lot over the last years, also due to COVID, where we had many online events. But all these startup events all over Europe, they are now also supported with apps, so you can really organize your schedule for this event. You can check first of all the participants. You can also use in this event pages kind of a matchmaking. To meet the right people and to make the optimum use of this event and of this money you spent into the event. Furthermore, LinkedIn is always helpful to connect with people. But I think it's also a side effect of this event that you get to know the people, and if you had an interesting conversation with someone that might be useful at a later stage, you can add them on LinkedIn and reach then also out to them at a later stage. But I think, personal meetings, it was hard over the last years, but this event environment picked up again end of last year. I think we started ourselves to go again to events in November, December last year. And I think it will continue. And people really want to go outside. They do not want to do only online meetings. They do not want to participate only at online events. They want to go outside, want to meet people. And it's still, different. I mean, also during this pandemic, we had many online events where you just met people through a video call, but I think it's different to meet them in person. I mean, you get to know them better, and you recall them also at a later stage easier than in this online meetings.
Definitely. And oddly enough, there's been a lot of interest in founders coming to us at Paralect and interest in wanting to build new event-based products or platforms. Just very recently, in the last couple of weeks, we've had a bunch. So it seems like events are coming back, and sometimes they're hybrid, sometimes they're in person. But it's the best way to go, and people love them. So should be good. Okay, let's talk about the founders that come to Greca. I can only assume that maybe they discover or they come to Greca after they've failed to reach the investments that they want on their own via their own network, and they are frustrated with this, and they need somebody like your team to help them. So what are these founders, or what are their startups usually missing in these cases? Is it a problem of information or delivery, or a problem just with them not having a big enough network?
Yeah, I think it depends also a little bit on the company phase, but of course there are also many startups who are just not able to present the idea, the products in a proper way, or in a way how investors would like to hear it. And here it's also about delivering a good pitch deck and a good pitch structure. This is the case with some startups, but if we are talking about startups that already have succeeded in fundraising, that have raised first financing rounds, also these type of startups often use Greca because this process is still very time intense. And it's also, a question of outsourcing or looking for help with some activities. Because how does this process typically work if you do it on your own? I mean, you do have your network, you can reach out to your people. Let's say a startup has around 100 investors in its network. But they do not exactly know in which type of companies they're interested. They just reach out to them, ask if this could be interesting. Then they can use events or pitching events to get more traction, or they do the cold approach through emailing, through creating lists on their own, and then monitoring this deal flow online. And this is, of course, very time intense. This is also what we have done manually back then when I was still working for M27. And Greca really helps to automatize this process. So you can, fill in your data in the platform, and then with the push of the button, you get a list of investors. You can filter this according to your needs, according to the investors types, the geographical region you're looking for, and so on. And then you can create an long list and share with them your profile and your documentation, and monitor this deal flow also through Greca. And I think here we really save a lot of time and help to make this process more efficient. I think this is also something many advisors are interested in, and it's one of our aims for the future to also integrate more advisors in Greca so that they can use this toolset of Greca to serve their clients and become
Great.
more efficient.
Super. You mentioned sort of the stages that Greca works most commonly with a little bit earlier, but I wanted to outline if there are any kinds of startups or other stages that would not be a good fit for Greca's services. Are there certain industries that you guys don't work with, or is anything like that?
I think in general we are open to all type of startups, and after first assessment, the company will get an investment grade, and here we of course do also have a certain commitment to our investors to only onboard companies of a certain quality. So this investment grade ranks from D to AAA, and we only onboard companies that have received at least a rating of B. So here we decline some companies also. It's mainly companies who are in the too early stage, or who do not have a great team, a profitable market, and so on. But with sectors, we do not have any limitations. I mean, this you can see then at the later stage after performing a first matchmaking. I mean, if it's a sector or industry where we do not have any investors, of course, we cannot support this company. But apart from that, there are no real restrictions with regards to sectors. Of course, the hot sectors, everything around digitalization, AI, Internet of Things, software as a service business models is very interesting, but also digital health solutions, digital media, agri-tech, also the green tech sector receives a lot of attention nowadays, and solutions in this area are very much looked for by investors. But we do not have real restrictions.
Okay, well, it's good to know. Let's move on to the other side of your marketplace then, the investor side, which you've already started talking about. How are the problems that investors face different from those of the founders? Does Greca serve simply as an extension of the deal flow pipeline that they already have in place?
I think so. I mean, through Greca, they can, of course, extend the deal flow, but it's also about a highly qualified deal flow because, especially VCs, they get many pitches every day, many not really fitting the investment policy. And through Greca, it's really ensured that they only receive pitches in an area where they have the investment sweet spot. Uh, this means they're not overloaded with thousands of pitch decks, and especially the institutional investors, they often do have very strict investment criteria. And here we use different criteria in the matchmaking algorithm, and this helps a lot to filter the projects for them and only forward them opportunities that really suit them. And increase, of course, also the chances for startups to be successful with fundraising.
Great. And let's dig into the matching system a little bit. It seems very quantitative from the way that you described it. And I guess that's a positive thing when we think about the sort of subjective boys club investing environment, I guess you would say. But is that an accurate assessment? And are investors very open to that very quantitative approach?
Yeah, I think this also depends on the investors types. As I just said, institutional investors often do have to follow a strict policy. So through this strict policy, you can already filter some companies. And here, Greca helps a lot. But on the other hand, we also do have many business angels, many high net worth individuals in the platform, or let's call them kind of boutique VCs, meaning smaller venture capital firms. They do not have the capacity to really filter business cases and to assess too many business cases. So here also this quantitative approach helps a lot, but for them it's of course also to a certain extent an emotional decision. And at the later stage, it's also about meeting the people and convincing them, on a more personal side of the business case. But I think for a first approach, this quantitative system really works very well. Of course, it cannot completely replace a more network-based, a more subjective approach or deal flow for investors.
All right, let's dig into that a little bit because I had a question about that. So it seems like, as you said, finding the right match or the right long list of investors is only step one. So how does a founder move from that list to actually meeting the investors and finding the right final match and finding the actual money that they need at that stage?
Mm-hmm. Yeah, in the first step, it's just about sharing the information with the investors and getting them interested, sharing highlights sheet to summarize the whole investment opportunity to make them interested into the pitch deck, to look into the pitch deck. And then in the second step, they can organize a first video meeting. After a video meeting, we should know relatively quickly if they want to look deeper into this, if this is really a fit for them, if they are convinced of the team. And after first meeting, they then typically ask further questions. They ask for further information, for financials, for a product demonstration, or for a real demo. Let's put it this way. And after this is done, it's also about the internal decision making process at the investors. And here, for the bigger VCs, it requires also a lot of internal convincing work. And then we can organize further meetings. We can organize personal meetings, and we should get first pre-due diligence, then to a term sheet. And with the term sheet, timeline is then usually very straight. So the timeline is set in the term sheet for the next steps. And then it's all about the real due diligence and about getting this over the line. But it's always important for startups to meet enough investors. So if they have maybe 2 investors interested, I think it's not a high chance that this will succeed. They always need enough options, and at the end, it's also a numbers game. I think with Greca, we can reduce these numbers to a certain extent because of the matchmaking, and because we really introduce them to the right investors. But it's still about numbers. I mean, many things can go wrong during this process, and it's not easy to find the perfect fit at the end of the process.
Yeah, and I guess I'd like to ask a little bit about underrepresented founders is a hot topic. It seems like still a very small percentage of VC money goes to, startups founded by women, startups founded by people of color. Does this quantitative approach sort of take those factors out of the equation in some ways, or how do you see that?
Yeah, of course. I mean, you can also include this. We do have this in the verticals of the investors' profiles. We do have, for instance, femtech solutions or female CEOs also within our investment criteria. And yeah, nowadays, really, some funds look exactly for a certain amount of investments also into female CEOs or into other impact investments.
It's good to hear. Sticking with the investors just for a little bit more, are there any specific types of investors, stage, market, location, or funds that Greca is looking to include in their network, or is it pretty open to all now that you guys are pretty global at this point?
Yeah, I think also on the investor side, there are no real restrictions. I mean, every investor we onboard to the platform is kind of a added value for the network. And our sweet spot geographically is, of course, the US and Europe, mainly Europe. But since Inspiralia also has offices in the US and the US has quite a big investment scene, the American market is also quite interesting for us. So around 95% of the investors in Greca are from Europe and the US. And as for the sectors, as mentioned before, I mean, most startups interested in Greca are really raising bigger rounds, but we can also do seed and pre-seed rounds. But it depends on the business sector. For investors, there are no real restrictions in this regard.
All right, let's move, I guess, towards the actual mechanics of fundraising now for a little bit, because it seems to me like the methods for fundraising have expanded quite a bit over the last few years. We had already 2 crypto booms. There's more opportunities to crowdfund sort of directly from retail investors, at least in the US. Maybe you could speak to that happening in Europe. Rolling funds are also opening up more to retail investors. What's your take on this, and how are you guys sort of adapting to these new options that founders have?
Mm-hmm. Yeah, I really think there are many new instruments, many new financing instruments, but I think this whole market grew a lot in the last years. This whole startup environment, also in Europe. If you take a look at the venture capital, at the private equity market, I think it reached an all-time high in 2021. Now we have a little decrease due to some conflicts all over the world. But I think this market is still a growing market for the long term. And therefore, there's also room for different instruments to use them complementary or at different phases. I think crowd investing, crowdfunding is quite a thing at the earlier stage to get money in. And also in the real estate sector, it's a very popular tool. But then you have, crypto instruments who are still quite new in the market. I mean, we had some startups in the past who did security token offerings. And I think it's still too early to make a final assessment on this. and there's for sure enough space in this market also for the traditional VCs, for the traditional investment cycle to further grow in the next years. So I think you can use this tool set more, complementary, but there's not the go-to tool in fundraising.
Right. Do you have any? I guess I'm always interested in these new options for retail investors, just because I had the chance to work with a crypto startup in 2017, and it was a very interesting experience for me. But I guess, do you have any advice for people who might have some money saved up? They might be thinking about pulling it out of a traditional index fund or something more stable and saying, oh, now I can invest in a startup. Do you have any general advice for people like that? It seems risky to me. That's my advice.
This year is for sure risky, but I mean, also if you take the VCs, I mean, the way how they work is that they make bets. I mean, they invest in several startups, but only 1 or 2 of 10 will then really succeed and get them back the earnings. And therefore, this business is, of course, very risky for individuals to do this type of investments. And it takes a lot of time to do a proper due diligence. So I would not advise to spend money on too risky businesses in the early stage, especially if it's not a big amount of money, because it's not worth to do all the due diligence, and also this information cost is too high, if you know what I mean.
For sure.
And also, the current climate is kind of difficult, and we have to see how this will develop over the next months or the next years.
Yeah, let's talk about the current market, I guess, for a little bit. People are talking about calling it venture winter, whatever. You said it was a small downturn, I think. What's your take on the current climate? You said there's still money around. Would you like to add anything else to that?
I think there was a small decrease in the number of investments, especially in Europe in the first half of the year. And I fear there will be a bigger decrease in the second half of the year, because it will take its time for this effects to also affect then at the end the startups, because it will become more difficult for the funds to raise their own money. I mean, now they still do have money. They have open funds, but if they have to raise new funds, I think it will be difficult, especially for the smaller funds. They have to get enough investments to continue their operations, and with upgoing interest rates all over the world, I think it will not be that easy to get in this money anymore. Therefore, I expect that this decrease will continue at least for the next 6 to 12 months, and then we have to reassess the whole market. I would not call it a venture winter. I think good companies will always get investments, but it's in case effect that many investors pulled out of deals that were too risky for them, of deals where the companies had no stable cash flow yet, where the companies still had negative results. And this is also something many startups are facing now. But especially the good companies and the companies that are backed by the bigger funds, I think they will continue with their investments. And good companies will always get money. That's my opinion on this.
All right. Do you think that there was a sort of bubble, though? Because I look at like the 10-minute grocery delivery, things like that seemed like, man, it's nice to get my groceries in 10 minutes, but it doesn't seem like that's a billion-dollar idea, at least from the outside. So do you think there were some industries that got sort of overhyped in the last couple of years?
For sure. I mean, this especially happened with the valuations in some sectors. There were hyped sectors like cybersecurity, also, different delivery organizations popped up everywhere around the world. And there were for sure sectors that were over-evaluated at least. And yeah, they could not deliver in the end often also the results. And this is a big pain point also for the investors to face this problems of too high valuations and of not achieving the results at the later stage. And yeah, they are more careful now also in follow-up investments. If a company has not reached the desired results, they will also think twice if it's really worth it to rescue the company, or if it's just another delivery hero or another delivery company, let's call it that.
Right, and you mentioned earlier that you guys do a pretty thorough assessment of the startup with this 5 different stages, 5 different areas. Is that something that, I don't know, maybe would have caught some of these outliers, or was it just that the investment interest was so strong that it didn't really matter?
Mm-hmm. Yeah, I think it's difficult to give a general answer on this. I mean, of course, this assessment helps to assess good or bad projects, but I mean, also a good project can fail at the later stage. So it's often good people involved in this business, but not the right timing. I mean, there's always a bit of luck needed to succeed, and I think this assessment does not go too much into deep to really filter these cases who received bigger investments from bad cases. So I think here Greca is not a big help.
Yeah. Okay. That was kind of out of left field, and it seems like it's a little bit outside the scope of what Greco maybe was designed for. All right. So, are there any other parts of Greca or the European startup landscape right now that I didn't ask you about that you would really like to mention?
I think we covered the most important things, and if you do not have any more questions, nothing to add from my side.
Great. Yeah, we covered a lot. And thank you for bringing your expertise and your experience to the show. I just wanted to give you a quick chance where, if we have some European startup founders that might catch this episode, are there events that you guys are going to be at upcoming in Europe in the next couple months?
Yes, for sure. I mean, we have quite tight event schedule. After the summer months, it will pick up again, and we will be at Tech Barbecue in Denmark, in Copenhagen. I think it's the second week of September, 14th, 15th September. And at the end of September, we will be then also in Munich at Bits and Pretzels. I think it's fair to say it's the biggest startup event in the German-speaking region, at least. And I really look forward to it, to meet again many interesting companies. And we do have then also for fall, for winter this year, some further events on our schedule. We will probably go to Slush again in Helsinki, which we also visited last year, and which was quite a big success. And maybe also other events, but this is not agreed yet.
All right. Well, if anybody listens and wants to meet up with you, can they reach out on LinkedIn and make a connection?
For sure, they can reach out via LinkedIn, or they can also visit our homepage. They can visit greca.eu and can access the platform to see more about our toolset. As mentioned before, there are also many freemium tools, so tools that you can use free of charge, such as the assessment reports, first matchmakings, one-pagers, and so on. And feel free to reach out.
Awesome. Well, thank you so much for your time, and have fun at those events. I think the one that I would love to go to would have to be the one in Munich at the end of September, because I think that's a good time to be in Germany, right? It's at the same time as Oktoberfest.
Exactly.
Yeah.
There's even entry included to some of the tents in Oktoberfest.
Well, there you go.
Yeah, this is really a great opportunity.
Perfect mix of business and pleasure there. All right, well, have fun, and thank you so much for your time.
Thank you too. It was
Bye-bye,
a pleasure.
everybody.
Bye-bye.